Hello, and welcome to the latest installment of Market Financial Solutions Conversations with Connor. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. Market Financial Solutions are a bridging loan and buy-to-let mortgage provider and are not legal, financial, investment, or tax advisors. This document is for informational purposes only and does not and should not be considered to constitute legal, financial, investment, or tax advice, or be relied upon by any person to make a legal, financial, investment, or tax decision. Therefore, investors are encouraged to seek appropriate professional advice. The opinions and views expressed in this episode are personal to the host and may not reflect the views of Market Financial Solutions. Now let's get started. Well, September was a month. It brought with it some really notable headlines, and while I try to avoid Market Financial Solutions bits of news in this series, I have to point out that we've had some major updates in recent weeks. For a brief divergence, I'd just like to remind listeners that in the last few weeks, we've launched a new core buy-to-let offering, a new valuation offer. We've removed our maximum loan size across some of our products and cut rates across our Bridge Fusion range. And we've launched a new Fusion Premier range specifically for portfolio landlords. I won't go through all the details here, but rest assured, everything you need to know can be found on our website. Focusing back on the external market and the wider news, I'd argue the most impactful update came courtesy of the Chancellor. It's been confirmed that the autumn budget will be delivered on November 26th. Tellingly, that is the latest date that it could occur. Soon, we'll all finally know exactly where we stand on taxes and legislation, and we can all prepare accordingly. Preparedness will be the name of the game over the coming months, as it looks like homeowners and investors are already making moves to ready themselves. Mortgage approvals edged up by 800 in July to 65,400, according to the latest Bank of England data, while UK finance showed a jump in mortgage lending in June. Specifically, there was a 14% increase in lending to first-time buyers. And on these first-time buyers, we're getting more insights on what their preferences are, which could easily be factored in by property investors. To start with, research from Pegasus Insight suggested recently that a flood of renters are preparing to move into home ownership. A good chunk have researched the affordability of buying a property in the last 12 months, and many are actively saving for a deposit. Interestingly, Barclays has revealed that those who do get on the ladder for the first time in the current market are opting for forever homes over the more traditional starter flats. Specifically, semi-detached homes are proving to be the most popular choice, accounting for 33.5% of first-time buyer purchases in August. In terms of where property investors could be looking, Croydon, Buckinghamshire, and Waltham Forest have emerged as Britain's busiest home buying postcodes, according to new research from Property Drive-By. On those postcodes, it's CR0 in Croydon, the SL6 district in Buckinghamshire, and E17 in Waltham Forest. Those are the areas that secured the most residential sales in August. In the rental scene, we're continuing to see landlords adapt to the realities of the current market. Landlords are increasingly choosing to invest via limited companies as tax and red tape pressures mount, and that's again according to Pegasus Insight. Specifically, the average proportion of a landlord's portfolio held in these kind of structures has more than doubled from 36% in Q1 2020 to 74% in Q2 2025. As a reminder, I'd like to point out that Market Financial Solutions can work with limited companies as well as LLPs, share purchase agreements, and more. The market seems to be nicely rewarding those landlords who stick around and find solutions to our broader challenges, rather than just abandoning the market. Rightmove revealed that advertised rents across the UK hit a new high of £1,577 per calendar month in August. This in turn has directly impacted landlords, with average rental yields hitting the 10-year highs in the second quarter of this year. The Northwest, Northeast and the East Midlands are leading the pack here, all averaging yields above 7%. HMOs continue to prove to be especially worthwhile investments for buy-to-let investors, with recent analysis showing HMO landlords see double the gross rental income of non-HMO landlords. Over the last 12 months, landlords with HMOs have received gross annual income of £120,883 compared to nearly £62,000 for the average non-HMO landlord or buy-to-let investor. Just a quick disclaimer, we are not investment advisors, and we are not recommending that investors or landlords should invest in any one type of asset or area. But should your clients require funding for a HMO, we may be able to help. Indeed, brokers, borrowers, and lenders all need to ready themselves for the changes that are coming to the rental market. Investors will be forced into action soon. We're getting closer to that point in time. The Renters' Right Bill returned to Parliament in September, and as of right now, it's in the final stage before it receives royal assent. Few investors are in the market appear to be looking forward to its implementation, but Matthew Pennycook, the Housing Minister, has promised to support landlords in coping with the introduction of the reforms. Also, optimism seems to be slowly emerging among landlords despite the bill. A survey from Landbay showed 58% of landlords plan to keep their properties over the next 12 months, up from 47% last year. A quick look at the bridging side of things reminds us of the fact that despite our industry making huge strides in recent years, our products are still underutilized in many corners of the housing market. Clearly, we still have so much potential on the horizon, which will only benefit borrowers who are in clear need of the solutions we offer. So a recent study found that 34% of individuals who had their mortgage applications rejected were not referred to a specialist lender, despite many of them meeting the necessary criteria. Imagine just how many purchases or other investments could have been saved here with a simple bridging loan. We must never lose sight of this or underestimate the impact of our market. Just to emphasize the point, Santander research showed that failed transactions in the housing market costs our economy about 1.5 billion a year. The broader economic news didn't really offer too many surprises in September. Inflation sat at 3.8% in August. House price growth across the indices was relatively flat. And the Bank of England kept the base rate unchanged at 4% at its most recent vote. I personally think everybody will be paying more attention to the next set of updates from here. The next vote from the Bank of England will be the last one before the budget. And as we edge ever closer to it, I'll do my best to keep you in the loop with how our market is reacting and adapting. Thank you. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.